Good day, everybody. My name is Lazarus Amukeshe, and welcome to another economic update for the first for 2021, actually. So compliments of the new year. And I've invited Eloise to Plessis. She's the head of research at PSG Namibia. Eloise, welcome.
Hi, Lazarus, and welcome to the new year to all our viewers.
Yes. Eloise, today I want us to talk about two very important things. The first one is the current account, and then the second one is the private sector credit extension. Basically, again, from the start again, just tell us what the current account actually measures, and then before we move on to the private sector credit extension. Over to you.
Yes. Okay. So the current account is just a fancy economic name for the difference between how much we are importing versus how much we are exporting. So when the things we bring into the country are more than the things we export, like all our minerals and grapes and things that we export out of the country, then we are in a current account deficit. And when we are exporting more, so when we send more to the rest of the world than we are bringing in from them, then we've got a current account surplus. So that is the very, very basic explanation of the current account.
Okay. So tell us what do the numbers show us on these imports and exports?
Yes. So what we can see in the third quarter that happened. We returned to a very small current account deficit, as you can see on that graph. So in the second quarter, we actually had the first current account surplus. So we exported more than we were importing in a very, very long time. That has now reversed in the third quarter, and it's largely because there was a recovery in imports. Following the easing of the global COVID-19 restrictions, as well as a bounce back in oil prices, and then broadly, so that's on the import side. But then we had a weak export performance as well. So it erased then that big surplus that we had in Q2. If we look at the trade, the goods balance actually had a deficit of 380 million in Q3, which was narrower than the deficit of 430 in 2019. And the reason for this is that our import bill keeps declining more than our decrease in the exports. So the biggest declines that we had were for fuels, vehicles and aircraft, and consumer goods. And then on the other side of the ledger, our exports fell by 30%. And that's largely because of diamonds that were down 61%, manufactured goods down 38%, food and live animals were down 28%. But if we now had to have a bright side in all of this, the value of our gold export earnings rose because there was a higher gold price. If I can tell you, where are we getting these imports from? We still get most of our imports from South Africa, 62.9%. And then that's followed by China, 6.9%, and then the Eurozone. So the things that we're mainly importing from South Africa is fuel and consumer goods, and then our machinery we get from China. And if we look at our exports, and we're going to look at what are the goods that we're exporting just now, but our main export partners is China. So we send 30.5% of our exports to China and 26.5% to South Africa, and then the rest is to the Eurozone. The share of our exports to China actually nearly tripled over the past year, which reflects the increase in the uranium and zinc exports. And what we're sending to South Africa is mainly gold and live animals. So on this graph, you can see what are we actually exporting, and the biggest part remains our mining stuff, like the mineral products and uranium. Diamonds are now very small, but it's because we've seen such a decline in the diamond trade.
Yeah.
So this graph shows us where what are the things that we're actually exporting. Food and live animals, around 5% of our imports. So our exports. So our exports are very much dominated by our mining.
Okay.
So if then carry on to the private sector credit extension. Now, again, what is private sector credit extension? Again, it's a fancy name for saying how much are the banks lending to people in Namibia.
Yeah.
How much are they lending to businesses? How much are they lending to individuals?
Mm-hmm.
So we actually saw that it ticked a little bit higher, 2.7% in November, and the growth was only 2% in October.
Yeah.
So we're still seeing that businesses don't want to borrow from the banks, or maybe they want to borrow from the banks, but the banks are not lending to them. So we can hear it from both sides there.
Yeah. Mm-hmm.
So there may be a little bit of an increase in the short-term credit facilities by businesses in the wholesale and retail trade industry, especially before Christmas. Remember, these numbers now go to November.
Yeah,
so as the stores were kind of ramping up for Christmas, they had a bit of an increase in the requirement for credit, and the agricultural sector as well. So the slower growth was still in loans in advance, in installment and leasing sales, which continues to be affected by COVID-19. So that's what we're seeing on the credit extension side. Even though our interest rates are at historical low levels, it doesn't look like it's really enticing people to lend more money.
Okay. But then again, with all this, what does it kind of show us going forward? I mean, for the whole of 2021, if you can make predictions. I don't want to come back to you and say what you had told me, just to be on the safe side. What does the picture look like going ahead?
Now, I will speak like a true economist, Lazarus. You will not be able to pin down on anything. So if we do look at the outlook, there was now this reversal, this drop in imports in Q2, and we will have the continued export weakness, which means that it's probable that we're going to have a small current account surplus in 2020. Okay, so maybe at the end of 2020, we've now seen in Q3 there's that tiny deficit. Maybe this can actually be a surplus again, but it's not for good reasons, right? The reasons are because we're not importing, economy is not strong and buying a lot of stuff. And it's only temporary, because as the current account balance will deteriorate over the medium term, I think, because I believe we're going to see a reduction in SACU receipts with the South African economy also struggling through the COVID-19 crisis. There's going to be an increase in capital goods imports for mining projects. And the recovery in oil prices, I think, is going to be modest. There's not going to be, a huge increase, but we might be paying a little bit more for oil. So what are our downside risks in the near term for the current account? The first thing is that there's a possibility that, and we've seen it now, that travel restrictions are just going to be longer and possibly worse as we've got these new waves of COVID infections. We see the mutation in the virus, countries saying, okay, we're stopping all travel from certain countries. So that weighs very heavily on travel and transport services. And then weak demand for luxury goods. So the diamond production definitely suffers due to that. Then if we're looking at government debt, which is something that I'm also always worried about, our deficit has has just really spiked out. Government is at levels that we've never seen before,
Yeah.
and that could be exacerbated actually by these loss in revenues from SACU transfers, and the decrease in the diamond exports and services. So these are the things that are major risks for the economy. There is, however, hope in the fact that we're seeing all this rain.
There we go.
So maybe we will see that the economy recovers somewhat, because we've had such good rains all over the country, and that can actually boost the economy to a large extent. Agriculture, as we've seen, is not the biggest contributor to the GDP, but it's our biggest employer. So most people in the country work in agriculture, and the rain, just in general, the rain lifts Namibian spirits, you know. So just with a better mood after the drought, I think that there is some light at the end of this tunnel.
Okay. So just before I let you go, let's go back to the issue of the rain, right? So we've got all these dams that are full of water now everywhere, and there were talks several months back, I think a year or two also back, that we need to have green schemes up and running by all these dams. Do you think the current rains now provide for such a strong base for us to have those in place?
See, the problem with these things also always lies in the timing, right? Because when there's drought, no one wants to think about a green scheme.
Yeah.
Then when it rains, you hope it rains long enough and the water stays there long enough that the green scheme can actually get up and running and do what it needs to do. So I think that we need to be able to plan for longer and not just have these gut or these knee-jerk reactions. You know, only look for solutions when when our dams are at 10%. We need to be able to do planning so that we can ride through these cycles, because we know they're going to happen. We know that there's going to be prolonged periods of drought, and then we're going to have rain again, like we're seeing this year. But I do think that it's important that we use this infrastructure that we've built. You know, we've spent all this money on Neckartal Dam. Let's actually make that work for the economy. So I think it's really important for private sector to be allowed to come in and make something of all the water that are in these dams, and especially Neckartal, because we've spent so much money on it. We definitely now need to do something with it.
Yeah, definitely. Eloise, thank you so much for, again, always taking us through the numbers. What we've talked about today was also very important, just bringing in also the rain aspect of things. And thank you again. We'll call you again when the Q4 numbers are out and the December figures are out, to see whether our predictions that there was going to be a little bit of uptick in debt during December really actually happened or not. And yeah, thank you so much, Eloise.
Excellent. Thank you so much, Lazarus. Have a great day.
Right, cheers. Yes, and that was Eloise du Plessis, Head of Research at PSG Namibia, bringing us a breakdown of the current account for the Q3 2020 figures, as well as the private sector credit extension for November 2020. Thank you. Keep watching and do subscribe to the Namibian YouTube channel. Cheers.